Today, I'll be going over some areas of focus that when the Office of Finance is looking to start to automate their financial close, they should be aware of. Before we start, just to give a brief background on myself, my name is Tyler Yorke. I am a product marketing manager at Trintech, and I have roughly 10 years of experience working in the financial industry of some sort of capacity, be it product manager or a product marketing manager. In terms of the agenda today, we'll first begin today's discussion talking through the current challenges and expectations facing the Office of Finance. From there, we'll perform a health check on a typical financial close. Then we'll discuss the challenges with manually managing your high volume matching process and how automation can help, and then wrap it all up with just a brief Q&A session. So in times of crisis and insecurity, everyone, including internal staff, C-suite executives, investors, and other stakeholders, look to the Office of Finance for financial guidance and reassurance. This has never been more true as it has been over the last 2 years with the pandemic. The pandemic exposed outdated systems that weren't able to be adaptive for changing needs in the work from home mentality. This unfortunately impacted very important decisions and investments that Office of Finance needs to make. As many of us know, historically, the finance function has been an underappreciated area of the business, but is now widely understood how critical this function is to the overall health of the organization. Today, CFOs are ready to push their businesses to be more competitive. That means a broad-based approach and pulling on all levers with an intense focus on the people, the digital transformations, and real-time data. CFOs can expect the current war on talent to accelerate in the coming months. The reality is there has been a mass exit of the workforce, resulting not only in staffing shortages, but also directly diminishing the strengths of companies' culture. In a PwC's August Pulse survey, nearly half of the CFOs polled cited loss of corporate culture as the biggest challenge of hybrid work. In fact, it is a greater concern among those CFOs than it is across all executives. CFOs need to act fast to support finding the right talent, efficiently onboarding new employees, and proactively investing in retaining those hires for their organization to thrive in a hybrid work environment. CFOs have another worry around people, which is turnover. We have all heard the new phrase, the Great Resignation. 8 out of 9 executives say they're experiencing higher than normal turnover right now. So it is no surprise that 81% of the CFOs are concerned that high turnover and labor shortages will impact their company's revenue. Why are people leaving? More than their peers, CFOs think it's for better wages and salaries. Though CFOs may not want to make extensive changes to compensation structures because they don't think turnover will last. CFOs are concerned that growth will be limited if they can't find a solution to the labor shortage issue. Following on that, according to a benchmark study Trintech conducted, when asked where respondents see the biggest challenges over the next 5 years, 50% ranked completing quality work, making sure the work is accurate, and meeting deadlines as their biggest challenges. 33% ranked attracting talent, overtime, and employee burnout as their biggest challenge. The fact that 50% of respondents are concerned with their work capabilities reinforces the sheer volume of work that was added to the Office of Finance because of the uncertainty brought on by the pandemic. Like we mentioned earlier, these new expectations of the Office of Finance are not going away once the pandemic is over. So it is critical to have the necessary processes and technology in place to help your team complete quality work. Without automation in place, your teams will result in working nights and weekends during important accounting periods. These times of increased work pressure and high levels of stress will negatively impact your employees and lead to a higher burnout rate. And looking at talent pool, organizations are trying to recruit from, it is important to note that the younger part of your workforce are technology natives. They do not have to learn how to use the technology. They were born into it. They simply don't know a life without it. To them, it isn't a nice to have, and it's an expected. So now let's do a health check on the current process. Here are a couple of questions so that we can start to evaluate the health and start to think about how an automated financial close solution can help bridge the gap of closing outside of the ERP. Are most or even part of your process conducted through manual disconnected spreadsheets? Do you have difficulty in determining and or quickly viewing the status of tasks, risk factors, or bottlenecks? Are you conducting large and or long meetings to determine the status of the process, taking time away from actually completing it? Are your audits extremely time consuming, and do you find it hard to find crucial support information due to poor documentation? If you answered yes to any of these, I think we can agree that your current process will not get you to the end goal of ensuring the integrity of your financial close in the most efficient and effective manner possible while reducing both your costs and risks. So what do most organizations think their financial process close looks like? At a very high level, it appears there's a nice, simple linear flow between all the separate sub-processes involved with your financial close. It is key to highlight the information that comes out from the existing system on the left-hand side, such as your ERP, and follows the teal arrows through the various sub-processes, such as reconciliations, close tasks, activities, and compliance controls, with all the people involved making sure the numbers are there for the CF to sign off on. I think it's fair to say that this diagram showcases a fairly efficient workflow. However, in reality, it isn't this simple. A lot of the complexity in regards to the financial close process actually comes from the very state of this process and the source of the underlying data. So what does the process actually look like? What most finance organizations see, and what we all know to be the case, is more like this. There are multiple lines of communication and different manual process being followed. Documents are flying around with different comments in Word documents and Excel spreadsheets, messages incorporated from telephone calls, multiple levels of communication between each participant as we work through each of the sub-processes. It is a lack of a standardized process and confusion that creates what we call white space and leads to the types of manual activities that your team spend most of their time doing, adding no strategic value to the organization. This kind of approach also makes it incredibly difficult to focus on the ultimate goal, which is producing the most accurate financial reporting documents in the most efficient and effective manner. It is key to note that this whole process is heavily collaborative, including both quantitative and qualitative information, with the vast majority of the companies still performing these tasks manually outside of their ERP, exposing the organization to a high degree of financial risk. So what does a healthy financial close process look like? You see, by automating the financial close process, organizations around the world have been able to overcome the challenges we just discussed, and they're seeing quantifiable benefits from their efforts. So what are some of the benefits that can be achieved from a financial transformation? Well, according to the Hackett Group, top performers close 4 days faster. They have nearly 50% lower audit fees and 55% lower costs. In all, optimizing your close will increase the quality, integrity, and efficiency across your finance organization. In terms of transaction matching at a high level, this process seems pretty simple. You have an item from one source system and another from another source, and it's simply the action of matching the two together. The truth is, what happens if you have multiple ERP systems or different external sources, or what if the items don't match? Very few companies have performed any automation around this process, let alone have been able to address the sophisticated rules that these new and emerging payment channels and data sources have caused. That means that nearly 2/3 of the organization are still taking all this information into Excel or other tools and then manually matching these items. But what happens if you have thousands or even hundreds of thousands of these to manage? Some of your organizations may have a VBA script written which can help with this, but what happens if that person leaves the company, or business or management is asked to adopt a new payment channel? So let's start thinking about how we might use technology to help address these challenges. There are a number of general principles which are common. However, we have put together 4 steps that will help this. The first step is about ensuring the quality and consistency of your source data. In an ideal world, all of the data that we are matching would be the same source system. We are left with a challenge of having source data coming in from multiple different internal and external systems. As it stands, we have to manually manipulate this and manage it to try to get into format so that we can match it. The second step is in maximizing technology in support of an automated transactional system is to ensure that we can manage multiple matching algorithms and rule sets. Although a simple one-to-one match will cover many of your transactions, there are still a large number of scenarios where there isn't a straightforward one-to-one match. So even if we have the source data right, without a system to help with this, you can see that there's still work to be done. The third step is actually the most important. In our experience, when people are managing this process manually, these are questions that they don't have readily access answers to. And if they do find one, they don't have the time or resource to investigate it effectively. Once you have found the issue, you need to be able to resolve it. The final step in this process has to do with the knowledge and confidence that all controls are operating consistently. What rules do we have that govern the materiality of these items, and how do we manage and document the resolution? Now that we have gone through the 4 critical steps to help us address some of the challenges of daily transactional reconciliation, let's take a quick look at where most companies are spending their time when it comes to managing these transactions. On the left-hand side, you can see the organizational time split for an organization that hasn't embraced a commitment to automation. They're spending the majority of their time in data management and matching, with only 10% of their time looking at exception handling, ensuring that their controls are operating effectively and consistently. Where we really want to be is on the right, flipping the current effort on its head and utilizing the automated financial close solution. We want to be spending the majority of our time not loading and tidying up data, but actually focusing on the exceptions, investigating these, and properly diving deep into them. With a financial automation technology solution, it allows the support of efforts to maximize the process of auto matching and the exception management, while at the same time helps us to manage our control more efficiently and effectively. In addition, every touch point would be recorded and logged within an audit trail, which means we can prove that everything has been performed consistent with our internal controls. So we spent a bit of time speaking on the 4 critical considerations for managing transactional reconciliation. But let's take a bit of time now to talk about a few things that you must keep top of mind when you are starting a financial close automation project. The first question you should ask yourself is, how do I automate the data loads and the manual manipulation of the source data from an existing or legacy source system? At this point, it's worth considering that the source data will vary between sources and different matching scenarios. The next thing we want to think about is, how do I maximize this system performance by leveraging multiple automatic matches based on defined criteria before attempting any manual matches? What happens if we have millions of items to match? Suddenly, we have a very large number of exceptions, some that might be difficult, if not impossible, to manage without some form of automation. It is not uncommon to see a client with automated match rates of 97% or better with automation. The next question we need to ask ourselves is, can the solution assist me in identifying unmatched items and reduce the amount of time I spend manually resolving them? Let's imagine we are at the stage where the system has gone through the data upload. There's still a huge opportunity to improve productivity by presenting that is remaining in accounts in a way that helps them do their job. With a well thought out technology, we can see how specifically what did not match, more importantly, what did not match. We can quickly assess if this was an issue with the underlying data or if there is more complex issue at play. The final question we should be asking is, how can I get the solution to flag items to further investigate, generate the request by email, and track them to resolution? So these are the items we know cannot be matched and will need further investigation. These exceptions now need to be managed through to resolution. So with these 4 considerations in mind, we can see how an automated financial close frees up your accountant's time to figure out the root cause of the exceptions, instead of combing through and reconciling transactions that match perfectly already. And instead of having to schedule constant task update meetings, financial management can simply log into the system and pull up the dashboard to see the process status of the following Office of Finance to provide more value and add insight within the organization. Thank you for your time.